all you wonderful money masters and treasure hunters. Welcome to the February 21st terrific Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I absolutely treasure your presence here today, and my outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life, because leading an inspired life, folks, that is what it's all about. So let's go take a look at one of our tools. This is the tool I call the 4 ifs in life. The 4 ifs in life. You know, there are 4 ifs, folks, that that are basically in the area of growth and change, that what I consider to make life worthwhile. Real easy. You can write these down. The first if: life is worthwhile if you learn. Last evening, folks, what an incredible time. I enjoyed myself. I hope everybody else out there that attended did as well. Last evening, I presented my reading the message of the markets workshop, and really based upon the emails that I've received, the different messages that were put into the DAN that we were using last night, just all the great. So life is worthwhile, folks, if you learn. And last night was cool because we all learned something. So I think we got if number 1 out there. If number 2, the second if in life: life is worthwhile just simply if you try. You've got to take what you've learned and see if you can try it, in your own hands, in your own trading. And last night, that's what it was about in trading. And look, it applies to just life. It's not just about last night's workshop or what have you. These ifs work for everything in life. Life is worthwhile, folks, if you try out there. The third if in life: life is worthwhile, folks, if you stay. Now, this really applies to trading. I believe that learning to stay is absolutely critical. It's crucial. You don't have to stay forever. You just have to see it through. That's really what life is all about. That is what trading is all about. The trading plan that I shared last evening with folks that has produced extraordinary results. 83% return in 7 months is a disciplined, very disciplined plan. Has a set of structured rules out there, and all it does is it teaches you to stay in the trade, to see it all the way through, whether it works, whether it's a successful trade, or whether or not you get stopped out there. The fourth if in life, folks: life is worthwhile if you care. Now, caring is one of the most unique human experiences that each of us can have out there. I care about each of you. We're all part of the TFNN family, and family comes first around here. So caring, it is vital. It's powerful. It's an all-encompassing kind of a feeling, and caring, folks, is far-reaching out there. So what I've learned is that if you care enough, you get magnificent results. So to lead a life of abundance, a life worthwhile, I say you've got to learn the 4 ifs. You've got to try, you've got to learn, you've got to stay, and folks, you've got to care. So let's go see what these markets are doing out here right now. In fact, at about 5:01 this morning, I took a long position in the ES Mini. Used the exact same technique that I taught last evening. That was part of the trading plan that I shared with everybody. And I don't just say it, I do it. I live it. That's what it's all about. Now, that's just simply a trade. That's on a 30-minute chart. We're taking a look at a 30-minute chart out here on the ES Mini. If you are listening on your radio, maybe you're listening on TFNN.mobi, thanks so much for doing that. Remember, you can always catch this live stream of this show here by going to the homepage at TFNN.com with your smartphone, your smart tablet out there. Over on the right-hand side, you'll see those three little smartphone devices. Click on it. This show will stream live to you. You can also catch the archive of this show on Channel 9. You can watch us on TigerTV on your computer. Right now, we're taking a look at the 30-minute chart here of the ES Mini. It's trading out at 1504.75. It's off a couple of points. We got a move down. Got a signal to take a long position. Came in right at 5 a.m. I've always been a early bird out there, so being up early in the morning, that's not a tough thing for me to do. Staying awake late at night, that's usually pretty tough. Now, if I take a little cat nap, a little 15-minute nap or so out there, I'll get my second wind. But I've always loved getting up in the morning. It's nice and quiet out there. I can get all of my thoughts together. And at about 5 o'clock this morning, we did get a little bullish engulfing candle here, but that was not the signal, and that was not the signal that we used in order to be able to take, or I used in order to be able to take a long position here in the ES Mini. Now, what the ES Mini is doing, as the other indexes are, they're certainly working off their oversold condition out here. We can see as the market moved down, And this is the 30-minute chart coming into the 4 o'clock session yesterday, really pushing down in the 13 level on that relative strength indicator out there, going ahead and working its way off, which it did, working off the oversold condition by really traveling sideways up until about the time of 3:30 when he had the European markets come out. Of course, over in Asia last night, they took a kibosh to the downside. You had the Hang Seng off 400 points out there. Of course, that is the equivalent of 1 7/10%. You had the Shanghai, that was off 74 points. That was 3% to the downside. The Nikkei off about 1 4/10%, 159 points to the downside. The Nikkei kind of yo-yo, can't figure out what it wants to do. Of course, we do know that it has a expansion, a 1.618 expansion pattern out there. Of course, part of that real yo-yo, no yo-yo, it's just been a down move, is in the metals market. Right now, you've got gold trading off $9 out at, $9 out at 15.69. Silver's off just a couple pennies out at 28.59. Light sweet crude down $1.79 off 2%. Maybe we'll get a little relief at the pumps out there. Platinum taking a hit this morning off $39 out at 16.07. Our call number is 877-927-6648. Would absolutely love to hear from you. What do I expect? I do expect to see a little bounce here in the marketplace. I got a signal in the ES Mini. Does that mean that it was just a one-day wonder yesterday? I don't think so. We'll take a look at all of the candlestick patterns out there. You know, if you're looking at the Dow Jones Industrials or the transportation, the NDX, the New York Stock Exchange, the Russell 2000, the SOX, the S&P, all having, the bears showed up for work yesterday. They showed up in earnest. Remember, this is a market since certainly November 16th. Some will say since March of 2009, which that would not be accurate. But this is a market where the bulls have bought the dips. So you're going to expect dips to be bought. You also have to expect that you're moving, you've got conditions here where you work into oversold, or if you get in overbought territories, where those conditions have to work their way off. And that's what it is that we have going on here. So on the ES Mini, what do I expect? Well, my expectation is a bounce. And there's a certain candle signal, there's a certain criteria that I will use to go ahead and exit my long position. Does that mean that when I exit, I will go short? No. On a longer-term basis, I am short the market. Do I believe that a market top was put in? Yes. Will we get confirmation today whether or not there was a market top? Yes, we will. We absolutely will. We'll see what kind of conviction it is that we have in the market. Let's go over and take a look at some conviction, though. That conviction is in the metals market. So let's go start by taking a look at gold here. Hey, even though this is a little green candle here, that's not a bullish sign. When we take a look at gold, we can see here that 1.618 butterfly pattern at that 0.786 area. It failed, and it failed miserably out there. Let's go ahead and remove that. That no longer needs to be in our way as we're taking a look at chart patterns here on TigerTV. Let's go ahead and get rid of the hammer candle. Let's go ahead and get rid of that high out there. Let's get rid of the A to B equals CD down, that 1-to-1. Let's go take a look and see what gold is doing. In fact, on this chart here, it's pretty easy to see. And the very key level is going to be, 1526, 1535, somewhere right around there. If we take a look at gold here, if you can see on the bottom of the chart, last time that gold got into this condition of being this oversold was back at the lows in May of 2012. That low was 1526.70 out there. I suspect that is what gold wants to do, wants to go down there, tag that area. It is oversold. It is a strong support area. The support area, is held ever since the lows of September 23rd out there. I suspect we will see it hold again, and we'll see gold simply build cause to go ahead and eventually get to lower prices. But right now, what the gold contract needs to do out there, the gold contract is going to need to work off the oversold condition. Have the bears shown up yet? No, they absolutely have not. I'm sorry, have the bears. Yes, of course. The bears have shown up in droves out here. So we can see the gold trading below the 0.786 retracement off of that low from May the 16th out there. I'm going to remove those lines as well. Really what you do here is I'm taking a look at the actual swing point. I'm going to draw a line across the top here. We'll go ahead and put that one in red, since the one kind of just below it, the support area, is in black. And the price point that you're looking at for gold to at least push down into is the 1552.20 level. So far this morning, gold has pushed down to 1554.30. So pretty darn close. in work out there. If we go take a look at a 30-minute chart, let's look at an intraday chart here, see if we've got any bulls here that are showing up. Oh, it looks like we have a few bulls that actually have shown up to work here in the gold marketplace. But actually what I need to do is just need to first refresh my screen. Okay, so refresh the screen out here. You can see on the 30-minute chart as well, getting into that oversold condition. Actually, I see a little reversal sign here. How about that? So I do see a reversal sign that came in at 2110 last evening. So what is that? 9:10, I guess, last evening. And I did not pay attention to that earlier today, but actually gold giving a signal here where you could have taken a long position at 2140 in the evening last night. That was on the gold contract. Of course, all it's doing is this little bounce. It's going to work off this little oversold condition, and soon it will go ahead and give a reversal signal, go down and test that swing point low. Let's go take a look at silver out here. Looks like we'll have to take a look at silver when we get back from our first break. This is the weekly chart on silver. The weekly chart on silver says it, too, wants to go down to its swing point lows. But we'll go switch back over to the daily chart, get a better picture of what it's currently doing. What we can see, it is traveling down to the 0.786 retracement. That would be about $28.10. Not a bullish candle sign yet on the daily chart whatsoever. So far, the push down, $28.29. Right now, Dow futures off about 5, ES Mini off about 50 cents. I do expect a little bounce here early on in the session. We'll be right back, folks.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Welcome back, folks. Jobless claims rose by 20,000, I guess, to 362 versus 351. Walmart out with earnings. Walmart's earnings. Let's go take a look at it here and see how the stock is trading this morning. They beat their earnings. Now, beating earnings, folks, look, my background, I'm a CPA. It's one of the things. I'm not a practicing CPA, although I am still currently licensed both in Florida and in Michigan. And beating a bottom line, a large public company, that is really easy to do. If you are good at your trade, that is easy to do with inside general accepted accounting principles. Beating the top line, well, you have to be a thief to actually do that, because on the bottom line, you're just simply basically taking advantage of accruals out there and other different techniques that are available to folks when it comes to the bottom line. But with regard to revenue recognition, there are very specific general accepted accounting principles. In this case here, you've got Walmart that did not beat on their top line. Their operating income, $27.8 billion versus 26.56 out there. They also have guided lower for the first quarter. However, Walmart is trading up out here. And we take a look at, and I see same-store sales come in the dent says up 1% for Walmart. Walmart closed at 69.21. They're traded at 70.14 right now. Also popping in the markets to the upside, you've got Berry Pete. BRY is the ticker symbol. Let's go see what is behind this. Berry shareholders, buyout here. Okay, lots of acquisitions. The merger acquisition marketplace is going to be hot for a while out here, especially while companies that what they need to do is they need to beat those top line numbers. And what they know is that most folks have short memories out here, and you're just going to pay attention to the top line results that come across, whether they have, bought other entities, whatever it is that they've done, doesn't matter. They know they've got to do that. It's going to be a tough road ahead out here in the marketplace. So we've got Berry. They closed at $38.59. Looks like they're going to receive somewhere around $47 on that. We've got Repros Therapeutics. Repros Therapeutics, I don't know if I pronounced that right, but they closed at 10.18, trading out at 13.56. Not bad. Linco LLC, LNCO is the ticker symbol. Let's see, where are they at? They're on the other side of that Berry trade. So they're trading up as well. They closed at $37, $36.99. Trading at 38.82. Constellation STZ, that is the beverage company out there, beers and things of that sort. They closed at 41.80, trading out at 43.30. They had a real powerful move and strong day out there recently, a couple trading sessions ago. Verifone Systems, ticker symbol is PAY. They are absolutely getting hammered this morning. Holy cow. We'll take a look at that stock chart. They closed at 31.89. They're trading out with the volume, looks like, down at the $20.05 mark. What is behind this? Looks like they now expect their Q2 non-GAAP net revenues, $435 million to $450. It doesn't tell me what that was versus. That didn't help me a whole lot. Didn't help you a whole lot. Let's see here. Where is net revenues? That doesn't help me. Well, what they are doing doesn't matter what. Obviously, they've missed somewhere, but they're truly getting hammered here this morning. We'll take a look at that stock chart once the market opens. Apple is trading down as well. Closed at 448. They're trading down $3 right now, out at the 445 level. Tesla Motors, TSLA, they closed at 38.54, trading down a couple bucks at 36.35. Kinder Morgan, KMP is the ticker symbol. They closed at 88.20. They're now trading at 86.20. Goldfields, GFI. We'll take a look at that equity. Closed at 10.31. Ooh, they're trading out at 8.63. So they are under some pressure this morning, as well as BHP Billiton. You know, some of these gold and silver companies are really going to set up some nice buys out here. Doesn't look like today is going to be the day for Goldfields. BHP, they close at 77.06. They're trading down a couple bucks out at 75.47 out there. Rio Tinto down as well. They close at 55.26. They're trading down at 53.60. Our call number 877-927-6648. Let's take a look at, let's go out of the silver market. Let's go see what's going on around the world here. We've got the FTSE. FTSE right now is down 1.5% here. FTSE giving a reversal signal. Let's take a look at the patterns out here on the FTSE. Let's get real. That trend line is going to be the first area where the FTSE moves down into. So this trend line just simply coming off of their November 19th low bar out here. Then you can use as your next touch point that December 31st. So we'll see if the FTSE is going to break this nice trend line that it has, or whether or not it's going to hold. Where's that trend line? I would say down at about the 62.50 area or so. 62.60 is likely where it will trade down to. Dow futures off about 12. ESPN down 1 3/4 point. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're up to the races. We got the Dow off 33 points, S&P down 7, Composite down 14, small caps off $2.70, trade out at 9.10. Microsoft down 21 cents, Intel down 12 pennies as well. Google up $6 right now. Apple is off $3.70. Let's go take a look. I've got Goldfields. GFI is the ticker symbol here. One of the stocks that is truly getting pummeled now. This closed out. I've got the weekly. But this is down. Let's see, Goldfields. Where is it on my chart here? Goldfields is off 17% this morning, down $1.70. This is the weekly chart on my screen. Why the weekly chart? Well, I wanted to see where it is trading into, and it's got this high volume candle right here down at the lows going back to October 10th of 2008 out there. The high of that session is 940. The low of that session is 630. It's at 867 right now. Looks like that is where it is headed. When I say where it is headed, we're talking somewhere in the 630 to 464 to 698 range. So 464 is the actual swing point low out there that takes you back in October of 2008, the week. So the range here, about $4.64 up to about the 698, maybe, what's that? Yeah, 698-ish, I would say, is where, well, the 698, 630 is where Goldfields is headed to. Now, if we take a look at the daily chart, let's go take a look at some volume here. You got big volume so far today. We've only been trading for 5 minutes, but 590,000 shares. Did volume yesterday as it moved down lower, did 5.7 million shares, breaking below swing points and everything. So that is on Goldfields. Just sit tight. Do not buy this falling knife here. That's Goldfield. Let's go take a look at Verifone Systems. That is the leader in the clubhouse, truly getting the kibosh this morning. PAY is their ticker symbol, gapping down with volume, big volume on the way down, taking out swing points and everything. Looks like we're going to have to go into the weekly chart out here. This is headed back into the 2010 time frame as well right now. Looks like that's where it's trading, into the 2010 time frame. So let's go take a look at let's go take a look at this on a weekly chart, maybe a monthly chart, to get a better picture of this. So it's trading all the way back into these swing points out here. It looks to me like where this is headed to. Oh, how about this? How about that volume gap down area? So it is now, so where it is headed to for sure. Payphone, well, it's right now taking on the 2007 gap down. We're looking at a weekly chart. This is December 7th, 2007. That low is $18.50. It's trading at $20 right now, but I don't suspect that that is going to hold it in place. Its next volume bar that it has on the chart takes you all the way back to September 4th, 2009. So it looks like Payphone headed to about the $14.67 mark, down to maybe $10.62. It's got this little cluster here of maybe some support, which is right around 19. As I say, I've read about $17, anywhere up to a high of maybe 23 well, it's taking out the 23. So looks like the next step down, about 1562, and I would say that it'll come down into this level of September of 2009 out there. Something to think about. Let's go take a look at, this one, this Rhodes Therapeutics out here. So I guess some type of FDA study looks like they was completed maybe a little bit earlier than planned out here. So let's go take a look at the stock chart because this thing is up about 43% here this morning. So RPRX, let's see if I actually got that right. RPRX, oh, yeah, it's up. How about that? It's up $4.40, but of course it's coming into a huge downdraft. Take a look at, there's Niagara Falls. This is the daily chart that we're looking at as well out here. So here's a absolute roller coaster out here. It looks like maybe a wooden roller coaster at Cedar Point. This thing, folks, you talk about wide price spread and volume off the top. Well, that's what January 28th was all about. So is there a bad news release? This went from a high of $18.50 all the way down to a low of $10.85 on 7.3 million shares. Now, today's action bouncing up, nice bounce here. Ain't as good volume, has 1.2 million shares already. But talk about psycho stocks out here. This one certainly fits that bill. As far as the move down with volume, it didn't move down into really a breakout area or anything like that. So I'm not sure what actually stopped the price out here other than obviously bulls wanting to go ahead and buy. But this is a psycho stock out here, Rhodes Therapeutics. Let's go take a look at something else that is moving, maybe not as psycho-oriented. Pegasus, Pega Systems, PEGA is the ticker symbol. Like Pegasus used to eat in Greektown at the Pegasus, mostly at Halaz though. PEGA is the ticker symbol. My best friend's grandfather used to own the corner barber shop in Greektown. Of course, that's when we were just wee little lads out there, and he sold that to Halaz, so they expanded their facility. But I digress here. Let's take a look at Pegasus. It's not really Pegasystems out here. It's trading up $3.60 out, up 14%. This thing had some nice volume here yesterday. So in a market that was down, this was not down at all. This had a nice price spread yesterday. Did 1.2 million shares. But it is right now trading into the most recent swing point from September 24th. Volume-wise out there, this thing has a decent move. Well, okay, so you got these psycho stocks out here. Take a look at this gap down with volume taking you all the way back into November of 2011. Gaps down with 2.6 million shares. You get a nice sign of strength on the way up on March the 1st with 2.6 million shares. Of course, it's not enough to get up over those highs. Really consolidates, and then boom, it moves lower. Right now, all it's doing here is coming into this supply line. So you can just simply draw the supply line, which is the last time you saw a sign of strength out here from March the 1st. I suspect that is the area that's going to hold as a resistance zone because those folks that bought in anywhere between 31.28 to 36.78 may have ridden this equity all the way down to $19 and change. So that's a 50% loss. I would say any of those folks that are in it that are seeing this pop here this morning are counting their lucky stars. And anywhere close to that $31 mark is where these guys are seeing some pressure. That is on Pega Systems out here. Home Away, AWAY is the ticker symbol. They were out with earnings, did revenue of $280 million versus $230. They did a net, they did earnings per share of 18 cents versus a loss of 31 cents a year ago. Let's go take a look at this stock, the equity symbol AWAY. That is up this morning here. Now we'll go take a look at a few other things that are getting hammered this morning. AWAY up over its most recent swing point. Looks like this is breaking out here. This is breaking out over the swing point of October 10th. That had 1.2 million shares. So far this morning, it's done at 800,000. So breaking up above that level with volume. We take a look at A to B equals CD patterns on this. You'd come off of that little doji low on December 10th. That would be your A point. Your B point would be the January 8th level out at a high of 23.71. Your C point is the retracement. Looks like about a 0.382 retracement to the Downside on January 14th, that low 21.35. Completed yesterday a 1-to-1. A to B equals CD. No bears. Actually completed it here on the day of February 15th. Moved sideways for 2 days. Now gapping up, gapping away. And this thing is really up above quite a level of resistance. You can see this. But I'm just going to take my line here. We'll go ahead and we'll make this a red line drawn across the bottom of the screen out here. So you can see this is up against or up over a resistance zone that goes all the way back, a consolidation range. You can also call it going all the way back into the early part of 2012. So it's been consolidating since really the low of the consolidation established on right around Christmas time of 2011. So this thing has been consolidating for quite a period of time. 2011, 12, so about a year and a half out here, and today trying to break above this area. Now, this equity here breaking away with some volume. Let's see what it's got up at the highs here. So this is an IPO, goes back to the early part of 2011, June of 2011. This area here that's breaking above today should become support for this equity. Old resistance, when you break above it, what happens? That's right. It becomes support out here. That's if it closes today above this consolidation area. It's got the volume to do it. Now we'll see if it actually has the price in order to be able to do that. Now, with the markets being so weak yesterday and with this having a pretty decent showing volume-wise yesterday, it should stay above that resistance area. Let's go peek in on... let's see, what do we have here to the downside percentage-wise? We've got the Carlyle Group. CG is their ticker symbol. They are down about 11% this morning. Must be out with earnings as well. Let's take a look at their numbers, if I can find them here quickly. They generated, I don't see the actual revenue numbers out here. Let's go take a look at the stock chart anyway. CG is the ticker symbol. Let's go see what this is trading into. Gapping down today, doing it with some volume. Yeah, and we'll go take a look at Apple, see what Apple is doing, because it's only off $1.87 right now, but we'll still go take a look at the stock chart here. This equity here gapping down has so far done 125,000 off of the highs. Made a high yesterday with 363,000, so it's got volume off of the top. Looks like this is a IPO out here without any volume other than the first 4 or 5 trading sessions back in about the $22 level. Let's move those out of the way and see where our next volume is. Looks like this is going to come all the way back to to this little consolidation area, which would be back at around the price point of $27. It's at $32.75. So this thing has further to go. It is the next area of possible support on this could be the swing point from February 5th. That is down at about the 29.70 to 31.69 level out there. So this thing has got some problems with the volume off of the top out here. Let's go peek in on Apple. Let's go see what that is doing here this morning. See if I can find it. This is a maze. I didn't clean this up here this morning when I got started. So let's go put up the ticker symbol and I'll duplicate the charts. AAPL. Give me a second here. Okay, so not really doing too much here, but it did close inside. Let's take a look at the swing point that it closed inside, which was so it closed inside the swing point from January 25th. That swing point high is 456.23, trading at 446.42 right now. Volume on that swing point is 43 million shares. As it came down yesterday, only did it with 17 million shares. So it's backing off into the swing point. And I suspect that what we'll see is we'll see Apple go ahead and test that low, which is 435. If it tests the low on lighter volume, it's not, and it closes back above it, it's not ready to bust it down, and it will move back up to the top of its range, the top of its little sideways trading range, which right now is, let me get rid of these black lines, make it a little bit easier for you to follow along if you're watching us on Tiger TV. Right now, the resistance zone is really set up by the swing point low from January 15th. And that low is a price point of 483.38. But first, what Apple needs to do is needs to get down and test the low 435 before it should go up and test the resistance zone. That should, keep some pressure on the markets. Right now, we've got the Dow's off 58. You've got the S&P off $8.58 here. Let's go check in on the ES Mini, and that is getting a little bit of pressure here this morning. My stop on this is a stop at 1498, I believe it is. 1498 is the stop on my trade out there. So has not been hit just yet. It's gotten down to a low of 1501. Let's go take a look at the currencies. We haven't looked at any currencies, so let's go see what the Queen is doing here. As we take a look at the euro, it has made a 1-to-1 A to B equals CD down. Let's let me refresh my screen here for a moment, and then we'll go down into the intraday charts out here. The 1-to-1 A to B equals CD down. That started with the swing point high of February 1st out at 137.098. That was your A point. Your B point here is the February 8th low. That was at 133.526. So, and your C point was 4 trading sessions later on February 13th, that high of 135.188. If we take a look at the retracement level, let's go and see what our B to C retracement was. Our B to C retracement just slightly above a 0.382 level. That actually says that what the euro wants to do is make a more than a 1-to-1 A to B equals CD down. So it's made the 1-to-1. It's simply traveling sideways. It's also trading inside this volume bar here, not volume bar, this wide-ranging bar on January 10th out here. We can see it has some room to run to the downside. So let's go take a look at the 30-minute chart and see what the bulls and bears are doing more on the intraday chart here. I need to refresh this screen. It may take a moment. While that is going on, let's go take a look at, see what else is going on here across the pond. So the DAX now is off almost about 2%, down 140 points. Okay, so now we're back on the euro here. The euro, let's see if we've got any bulls. You've got this little hammer candle on the 30-minute chart here. You really have 2 hammers, so we can see where the bulls are hanging out inside the euro, and it's really down at that price low right now of 131.664. The first time that the bulls showed up was about 5 a.m. this morning. No kidding. 5 a.m. That's when even I showed up as a bull to take a intraday trade on the ESPN. Dow's off 61. S&P is off about 9 right now. We'll be right back, folks.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers Closed down at short position and Chipotle Mexican Grill, CMG, for more than an $86 profit per share. Over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. The Dow is off 65 right now. S&P is off 10, trading out at 1501. The stock chart to watch out here, there's several of them, but I think the one that we want to pay particularly close attention to is going to be the Qs out here. Why the Qs? Well, you know, the Qs where we have a weakness in the marketplace, and we're going to learn a lot from weakness, and it looks like we're going to learn a lot today from weakness. Now, if we take a look at the Qs here, that's what I've got up on my screen. If you're watching us on TigerTV or Inside the Den, we're looking at the January 2nd gap up level. That low is 66.48. Now, what we know about the Qs at this level, if you take a look at that black horizontal line going across the screen, this area has held as a very, very strong support area. Number one, if you take a look at the first test, that took place on January 7th. That was 26 million. So you get 26 million going against 70 million. Not enough volume to push down. Closed back above it. Actually, on the 7th of January, gets down to 66.25. Closes at 66.76. And let's just put the number out here, 66.48. I'm going to put that on the chart. That way I don't have to keep looking in the back there as soon as I can find my tool here to do that. So we got 66.48. That's the number you're going to want to be paying attention to. And this is not a intraday number. This is a closed number. Then you have the Qs on January 8th. That next trading session, they get down to 66.17, close at 66.52. So back above the 66.48 level. 28 million shares. That 28 million shares going against the 70 million shares. Not enough to bust it down. The Qs move down, don't actually get down to 66.48. They get down to 66.56, 42 million shares. That was on January 24th. Stopped just before it, but still didn't get down and test it. Actually rejected that level. The Qs moved higher. They closed above that January second swing point. In fact, on that next move, moving into February 1st out here. Then on February the 4th, 48 million shares to the downside. They actually closed right on that number, closed at 66.48. Looked like what the Qs were going to do is they were going to go ahead and jump off of the cliff and gap down, and they did not do that at all. Today, so far in trading, 7 million shares in the first 26 minutes of trading. So you've got pretty decent volume. Still, though, probably not enough volume to take out the 70 million. Now, forget about the volume. Volume schmalium here. Right now, the key is price. The key is price and whether or not you see it close below 66.48. If you get it closed below 66.48, then what the weak hands are signaling to the marketplace, clearly signaling, is that they have busted through an old support level. And when you bust through an old support level, then it all of a sudden becomes resistance. And now we know that would be support 1. Support 2 on the Qs are going to be the high of that gap. That's the high of that December 31st candle out here. We'll go ahead and use a red line to go across that. So if you get a close below 66.48, it sets up the likelihood that what the Qs will do is get down into December 31st. Is it the high of December 31st? We won't know till it gets down there. That price is 66.25, so it's not that much to move further down there. I suspect if the Qs break this support level, because it's strong support, it will not just be the top of that December 31st candle. It will be the bottom of the December 31st candle where we'll see whether or not it can act as a support area. We've got a little hammer down here. That's this session from December the 27th. That low is 63.30. You got that nice big bullish engulfing candle, and then the gap up here. So 66.48, that is the number to be paying attention to. If we peek in on the king out here, if I can pull up king dollar, the king here getting up over its resistance line. That was a resistance line that had been tested 1, 2, 3 trading for a couple of trading sessions here. Getting up above that yesterday, that resistance line now should become support. Support on the U.S. dollar index should be the price point of $80.94. Time flies, folks. Thanks so much for joining. Remember this, folks, the 4 ifs in life. The 4 ifs. Remember the 4 ifs, and you'll be on the way to building a life of abundance. To lead a life worth living, I say, you've got to learn, you've got to try, you've got to stay, and you've got to care. Thanks so much for caring about us. See you tomorrow morning, or see you in a few.